Good afternoon, everyone. Just a little bit of introduction about myself. Mohammad Alblooshi. I look after the startup ecosystem, which Christian was talking about a bit earlier in the morning. I think the first thing that we'll do is do a quick round of introduction with our panelists. I'll start with Mahmoud, yourself.
Of course. Pleasure to be here. Thank you for hosting. My name is Mahmoud Adi. I'm a founding partner at Shorooq Partners. We started almost 6 years ago here in the UAE, and we have built a franchise across the MENA region with the presence in Saudi, Pakistan, Egypt, as well as, of course, our hometown, Abu Dhabi and Dubai. In addition to that, we have built a multi-stage investment company with multi-platforms focused on venture capital, venture debt, as well as early stage in the acceleration side. And pleasure to be here.
Thank you, everyone. First of all, thanks to the DFDF team. This is incredible. Great to see so many familiar faces. My name is Sara AlSaleh. I'm a partner at Outliers Ventures. We focus on investing in pre-seed and seed stage companies, technology companies in the Middle East and the US. We're very excited about the future of the region. We know it's a turbulent year. We've been talking about this just now, but we're very excited about what the new generation of founders, specifically product-driven founders, are building for the region.
Hello, ladies and gentlemen. I'm Sara Kindi. I am the head of private equity Asia and Europe at Emirates Investment Authority, which is the federal sovereign wealth fund of the UAE. I also manage their VC portfolio. And on a personal passion basis, I am part of the VC ecosystem where I'm a personal investor, but I also mentor and advise a lot of the startups that come our way. So locally and some internationally now as well. Very excited to be here, and thank you for your time and attention today.
A lot's been happening in the markets these last couple of weeks as VB and then some other banks. I think people really want to know the impact and how the VC community is actually receiving that. And I'd like Mahmoud, you to start with.
Yeah. Thank you for picking me for this. So it's quite unfortunate what has happened with SVP over the last, I would say, 10 days. It's quite shocking, and I was talking to some of my colleagues. Usually when we talk to investors, they would tell you venture capital is risky. And we kind of switched from our cash being at the bank being the safest to being actually the riskiest. And our money at the startup is actually a lot safer than the bank. So quite remarkable thing that has happened. I'm not going to get into the details of why that happened and kind of the build-up for that. I think that's sort of kind of past at this stage. But the implication of SVP is quite, is not a trivial, I would say the least. A lot of venture capital in this region, they do bank with SVP directly and indirectly. Directly, of course, where they deposit the LP capital into SVP, and indirectly through the startup that they invest in, where they have exposure to Silicon Valley Bank. Now, at Shorooq, I would say I'm quite proud that we were able to manage proactively when the crisis, when the crisis started to unravel back on Wednesday and Thursday, before the kind of Friday when the regulator put their hand on top of the bank. But that was quite intense because the struggle that this industry has, and especially in the region, finding a local banking partner or a regional banking partner is quite a challenge. And the question that we always get asked is like, why the local ecosystem don't bank funds like ours? There is a lot of details around that, but what I would say today, and I think when addressed to everyone in the room, there is today an incredible opportunity with the fallout of SVB to bring back all the capital that's sitting outside to the region. And I'm sure we have enough leaders in the room and outside the room to make that happen. It is not a small task, but it's doable and will turbocharge the kind of the capital availability to our ecosystem, will make our financial system a lot more sophisticated to push the innovation, especially for fintechs and so forth. So I see this as an opportunity, not only for us, but also for the regulator, for the banking sector, to learn from what has happened and really push on regional solutions.
I guess maybe I'm not going to highlight the things that Mahmoud mentioned, but it's really spot on. I think the biggest learning there is, number one, we need to be super agile. Thursday and Friday, at least for us, was a function of continuous communication, continuously looking for data points so we can make an informed decision, but also continuously showing up for our founders. I think those critical times, like you mentioned it as an elephant in the room, I suspect we're going to have a lot more elephants this year. And I think that's going to kind of determine who's here to build for the ecosystem for the long term versus those who are here temporarily, who might exit at the moment of first crisis. But I totally second what Mahmoud is saying. This is a massive opportunity for the region to build infrastructure for builders to continue building without having to rely on external ecosystems to support their visions.
Great. I'll probably go to my first question, my actual first question now, which is, what are some of the technologies or innovations that would have a huge impact on UAE's economy, on Dubai's economy?
The first thing that comes to mind is energy transition, climate. And when you're thinking about climate, we have COP28 happening soon in our country. There's many, many things to talk about. But I'd like to touch upon something different, and that's healthcare. So when we talk about direct impact, and today we're here to talk about innovation, human condition is the most important thing we should be putting in the forefront of any technological advances that can happen. And when it comes to healthcare, it's a direct human impact. So things like, and I'll give a personal anecdote, my mother is due for a knee replacement surgery, and recently she was talking about how her doctor is going to use a 3D printing to print her joint and then use a robot to actually implant the joint in her knee. And for me to hear that was very, very exciting. I mean, the technology has arrived. And what we need to do next is use all the buzzwords that we hear, artificial intelligence, virtual reality, 3D printing, to make the healthcare outcomes better for not just the patients, which is the human element, but actually for the systems that run the healthcare system and make it more cost effective, make it more efficient. So I think those are one of the things that we could target with technology that's impacting now our ecosystem.
I like to think about kind of super trend that underpinning certain sectors. So one of the bigger trend that we are seeing is productivity. And when we talk about what my colleague or my fellow panelist Sara talked about on the healthcare, for me that's fundamentally is about increasing productivity of the human being. When we talk about AI, we talk about healthcare, we talk about a lot of these things. It is how can I produce the same output or 10x more output with the same kind of input? And there is significant industries that are being impacted by that. AI is of course one of them, but also you click down, you double click on that, you would see technology under human capital, technology under so human capital on a productivity side. You see another big trend that we are very excited about, inclusion. Inclusion, not only gender inclusion, but also service and products inclusion. When we talk about how to deliver X amount of services to certain people that are in a wider, vast region, right? That's when you start talking about certain FinTech product that are today not available to certain type of the communities, and we bring these people online. Also, the inclusion is actually quite broader kind of concept. When we talk about the SVB situation, we as a fund manager, we didn't have the inclusion to be in this ecosystem to kind of park our capital. So it is a quite a broader perspective. And whenever we think about all the new technologies, we try to fundamentally understand what are they driving in terms of value, whether a substitution or a productivity or an inclusion element. And there is a lot of these exciting trends that we are seeing.
Great. Sara, what do you think? Do we have enough, whatever both Sara and Mahmoud mentioned, in terms of these solutions, do we have them in our market? Do we have such solutions, enough such solutions in the Dubai market?
That's an interesting question, right? And I want to reframe maybe the answer, because the question is like, do we have enough solutions to kind of champion the next generation of technologies? I'd like to reframe that as a question of like, do we have the right talent and do we have the right mindset? And I think this potentially excites me a lot more than, for example, like there's a lot of conversations about the new technologies, like ChatGPT, like AI is still like a trending topic. At some point, big data was, it's not anymore. But I think the thing that excites us the most is how can we kind of bring forward those new mindsets, new founders or founders with a different bar in terms of what they expect out of the companies, what they expect out of the teams that they hire. But also just like different ways of looking at the world. So instead of saying, I'm going to double down on this emerging trend, ChatGPT, it's like, I'm going to build an e-commerce platform or a FinTech company, but like then how do I continuously keep an eye out for what's happening and how can I use that to leverage my company? So for example, it's a lot more exciting for me to think about how, let's say, AI is helping one of our companies detect fraud versus thinking of just like specifically AI as an investment strategy individually. I think there's a lot of interesting overlap between the two, and I think they go hand in hand.
Great. I think you touched upon my next question as well. But I think just picking up from what you said, talent is one of the probably biggest challenges of, I think, startups, and I would say the same around the VC ecosystem as well. Do we think we have good talent, enough talent? And secondly, I think I'll consolidate my two questions together. ChatGPT has become the talk of the town since November. What do you think would be some of the use cases for the city of Dubai? Mahmoud.
Let's start with the talent piece. I do think talent is is a big challenge, not only in the country or in the region, but it's globally. And I think that's kind of a factual matter. However, we are quite uniquely positioned, especially like in Dubai and the UAE, to attract the best talent. Alhamdulillah, from a stability point of view, economic activity drivers point of view, from the unfortunate turmoils that are happening in the regions globally, that can present an opportunity where a lot of talent want to come and call Dubai their home. And this is an incredible opportunity that we can continue to tap into and continue to attract these talent. At the end of the day, everything we're talking about, the fundamental underpinning of that is talent. Do we have a challenge? Yes. Are we on the right track? Absolutely, and we should do more of that. Technical talent also is a challenge, and there are different ways to kind of address that. So that's on the talent piece. Now, on the AI and ChatGPT and all of these stuff, so it's quite remarkable in terms of the technology, right? I think the next question is, what is the application? What is the killer application? If you talk about all the technology investment, so the first time when the combustion engine came that drove the industrial revolution, right? The talk of the town is the combustion engine. Then that sort of people don't talk about combustion engine because it became the norm, but they talked about the application of it. Think about the internet. When the internet came in the first place, right? Everyone started to talk about the internet, but then we are smart enough as a human being to look up for application that will make us more productive, that will make us bring in more people or create a bigger TAM, that's the inclusion, right? Or substitute the older way of doing things with a much newer way of doing things because they no longer make any sense. So for me, what I look for is similar to what Sara mentioned, is what is the application that is coming out of these technologies.
So, Sara, coming to you on the same question, in particular, I mean, considering Dubai, what could be some of the use cases? There's a lot of hype around it. And the UAE government is, of course, looking at it and how it could be implemented. What do you think could be some of the use cases?
But if I had to come up with a plan, the best thing AI could do, something like ChatGPT, it has the power to be predictive. So let's take a step back. any innovation happens or anything new comes into market when someone experiments and then succeeds with that prototype and it builds upon that. So AI can actually help you hyperspeed testing new things. So I would use that first and foremost, actually running experiments, running things, figuring out if they're gonna, sink or swim early on, and then use it as such. So predictive thinking from an AI. ChatGPT is more of a language model. So we take a subset of that. Now, the best thing about ChatGPT is that it has the ability to make you feel like you're talking to a human being, that conversation capabilities. And Dubai is known for its tourism. That's the first thing we were, marketed for, I would say, amongst many other things. And I would say if we can come up with a way to make the life of a tourist better, have a personalized itinerary being designed by someone you can talk to on your phone, telling you where to go, what to do, what's the best places to be. Now, ChatGPT needs to be updated a little bit, but I think it could be used in that in a very, short-term period. It will be upgraded. One more thing I could think of is anything that requires you to have a customer service component to it. Now, whether it's a government entity that needs to interact with its people, or it's a private entity that needs to interact with its people, it can provide that conversational capability, that interaction, that happiness factor that comes with talking to someone. So I would say the first thing would be in the realm of smart government.
I mean, given I represent startups on the panel, a lot of us feel that startups at times build solutions to raise money rather than actually solving a problem. And one could argue that in the 6 months ago, there was easy money out there in the market as well. So how did you as VCs, as investors, de-risk that? What mechanism did you use when it comes to assessing these startups? Sara, I would like to say.
I think one interesting thing that Dubai can potentially do within the context of what's happening with AI, and like if I'm putting on my policy hat, I think there's an incredible opportunity to have some sort of champion for how AI, ChatGPT and so on can be inclusive. I think there's a lot of interesting work happening in the areas of high density of research like California, maybe some other cities, and I think this is a good opportunity for us as an emerging market, as like a lot of Arab speakers, like how can we become creators of the technology rather than just consumers and just like respondents to that technology. But that's a different topic that I think is very important. But regarding de-risking, solving for the wrong problem or potentially no problem at all, I think as fund managers, you bake it into your strategy, right? And every fund has a different approach at understanding the kind of profile that fits their investment strategy and how they think about what is a viable product. But I think over the long term, there's so long that you can push a product, and if consumers don't respond to that product in the market, it's not meant to last. So I think from a fund managing perspective, you want to invest in the right founders, and right is obviously subjective. For us, we focus on product-driven founders. We look for hypotheses. We listen to how founders construct their theses, what are the things that they're testing, but then eventually the market self-corrects, and the companies that truly have a pull will survive.
So capital is definitely an important piece of the equation, right? It is an input to the factory. If you think about a startup as a factory, you have sort of kind of two key inputs, which is the talent and the capital. The know-how and the ability to execute is the factory itself, right? And their ability to get feedback. The output is the product that they ship to the market. And their ability to kind of iterate and learn quite fast is quite important. So these are the two inputs. The more capital they have, the more opportunity, assuming that they are efficient in the sausage making, to actually get the product out and get tested quickly. The best companies that we have backed and we're quite proud of are the companies that are really great at execution, great at fundraising, and great at attracting talent, right? So and the fundraising, it's not a sprint. It's actually a marathon, right? Because you are in the business of fundraising over the lifetime of a company. And lifetime of a company can be 5 years, can be 10 years, right? When the market presents you with the opportunity of fundraising, you don't want to be undercapitalized and the rest of the market overcapitalized. That will put you out of the market, right? So you want to be smart on tapping the capital market, smart on how you spend your capital. You want to be extremely efficient. And when the market turns, you need to be also extremely efficient on the way to reduce your burn and make sure you have a clear offsite that ultimately what I care about is a product that the consumer wanting and they are using with health unit economics. So it's sort of a multifaceted sort of kind of problem that you need constantly to think about.
Sure.
Investing in anything is scary at this point, right? If you don't have a principled way of going 1, 2, 3 to figure out what do you have that you're investing in, you can easily fall for a fad. I remember there was a time when blockchain, anyone in even the public markets, forget the VC space, if you had blockchain in your stock ticker, you were making money and your price was going up. That's a fad. No one knew what was the underlying company's ability to use the said buzzwords. So as investors, we have to be really careful that we're not falling for these fads by, one, actually looking into the founder and the team that goes into it. And then, like Sara mentioned, figure out what is the problem that they're solving for. Because any buzzword, whether it's AI or bring any other buzzword that comes into mind, blockchain, it's limited in its ability to solve a problem. Most of the companies will require more than one technology to be able to solve for an X problem. So you have to see what is it that they're doing. Are they creators, like Sara mentioned, or are they takers and users? Do they have a competitive advantage in what they're doing? So if it's a technology that's available to everybody and they're just using it, what prevents another company from doing the same? So you have to be really careful that you're actually going deep down, looking up all of these due diligence points, and then double-clicking on any of the technology officers within that team. So if there's an AI component, a tech component, you need to see what is the qualifications and historical background of this particular person or team that's leading that particular fad word, I would say. So it's risky, but with diligence, it makes it better. With startups, less so. And as far as you go, buzz can get you funds in the beginning, and then more investors, more eyes come onto your company, and it goes away. So it's very important to do your diligence on that.
I think if we go back 2 weeks at least, and I think before 2 weeks, the talk was that VC money has dried in the States and in the West, which had its implications in the region as well. Hence, a lot of startups were devalued. Do you think, first, if VC money has really dried up in our markets as well, and how much? Secondly, are startups now getting their fair value? Were they overvalued before, or this is the fair value of a lot of the startups? Start with you, Sara.
I like substantiated numbers. I'm curious about what dried up means, right? Because like dried up compared to last year is potentially like still higher than 2-3 years before. So I'll look into the numbers before going into that. But the second part of the question is, are startups devalued? I also don't know how that's defined, but I guess the anchor, so for us we focus on pre-seed and seed, and the anchors, how does the founder think about the company today and how are they creating value for the long term? And that kind of serves as a filter mechanism. So the moment we start hearing someone talking about valuation or this is what I want, I need to triple my valuation like round over round, for us this is just a testament to maybe misaligned direction. Different investors have different priorities, but if the goal of the founder is to create value irrespective of the value, I think the short-term kind of volatility should be not detrimental over the long term.
Money in the GCC markets or in the MENA markets for startups?
So absolutely, like there is always money for great companies that build the great products. It might get tighter, but there is always an investor for good companies, good founders, good businesses, good unit economics. But I just want to go back to Sara's point. I completely agree. At the end of the day, value creation is about what you internally as a company building and what is the product you are building and how is your customer are using that product and are they paying you for that product or not? Are they sticking? Are they returning? Are you giving them more product on top of that? So that is actually the value creation. Now the stock price, if you want to think about it from public market perspective, right? That is determined by so many different factors that are sometimes or a lot of them actually external, right? To you. If you are a venture capital, you're not investing for the next quarter returns, right? You're investing for the next 5 to 10 years. And if you have that perspective, usually all of these become like really small kind of like nuances that really does not matter. If a great company, if you invest in a great company, that's going to be a great outcome for you, regardless. That's also what we like in being kind of early stage investors is do we believe that this product will take a significant market share, will replace or displace, right? And here we're not talking about marginal improvement. We're talking about 10 to 20x type of solutions that are being put out there.
Sara, what do you think? Where is whatever capital that's out there? Where is it coming from? Is it sovereigns? Is it VCs still, or is it family businesses?
So, in my opinion, at the moment, there's caution in the market. A lot of the parties, I would say, whether it's high net worth individuals, family offices, or institutions, who are the main capital providers to these VC space, they are scared. It's just the word it is. They're scared. They're looking at the markets. All the big banks, all the big economic professors are saying recession's on the loom, things are going to go bad. And for them, being overexposed to things that are VC-like, which is private capital that gets stuck in for a long period of time with no exit, there's no public market you just go sell it to. These captive audiences are getting jittery. Do they increase their exposure? Do they keep putting their money into things? That's the majority of the people I have come across, whether it's family offices, institutions, or high net worth individuals. I could be on the wrong side of the